Today I'd like to talk about technical indicators that we can apply to our price charts and tell you which ones work and which ones don't work in this quest to make money trading. Firstly, I've got to start off by saying that my best strategies don't use any indicators. Now, that might sound fairly surprising, but coming from a mechanical trading or algorithmic trading point of view, I don't use any indicators in my best strategies. I have used them, but definitely the best ones, they don't use them. So ultimately, they aren't necessary. That being said, at the end of this video, I do want to share with you probably the best indicator on a particular market that I've ever tested. And I'll show you how to use it to create a really decent trading strategy around it. So bear with me until the end. So what are these technical indicators? Well, if you've ever looked at a price chart, which I'm sure you all have, then you'll notice there's a huge array, maybe hundreds of indicators and oscillators. They're all technical studies that we can add to the price chart in the hope of trying to work out some sort of relationship to what the indicator has done to then what the price might do next, trying to predict the price movement from that indicator. I've done it, we've probably all done it, and let me tell you that there isn't one golden indicator, there isn't one holy grail of an indicator that works. I've done it myself. I've looked and I've studied, I've looked and looked and looked, and I thought if that just does that and that does that, or even a small combination of 2 or 3 different indicators, trying to find out that what predicts the market every single time. Well, there isn't one, or there isn't a collection of them. It just doesn't happen. You can't predict the market every single time. So don't get carried away in searching for that golden one indicator. What does increase reliability, I've found, is using indicators on a high time frame. So, for example, using an oscillator, say stochastics, on a daily chart, you're looking for signals when the stochastic gets to a certain level, or they cross over, or MACD crosses over. If you're looking at them on like a daily time frame, the signals are probably going to be far more reliable than looking at it on a shorter time frame, like a 5-minute chart. Anything below 4 hours, an hour, certainly I never look at anything below 30 minutes. Below 30 minutes is just noise in the market. So don't waste your time looking for signals from indicators on very small time frames. The next point I'd like to make is often the indicators, they all tell the same story. They're all calculated mathematically and they all use the same price and volume and that sort of thing to be calculated. Larry Williams, if you've heard of Larry Williams, he's a bit of a legendary trader. I follow him closely. He once said that he's got a very popular or a very well-known indicator called Williams percent R, and he said himself it's very similar to stochastics. So they're all made up of the same thing. However, that being said, you can get really mixed up because using quite different indicators can actually give you conflicting signals. I've done this again. You'll find what looks like a really good buy signal on one indicator, and another indicator is saying that it's way oversold and you want to be exiting your position. So it's giving you conflicting opinions, conflicting signals, and ultimately what it's doing is it's just making you confused. And if you're confused, you don't know whether it's a buy or whether it's a sell, then you're not going to make that trade at all. And if you're not making a trade, you're certainly not going to make any money. So don't confuse yourself with too many indicators. If you're going to use one, I advise you to stick to just a handful. Use them individually at first and really get to know how they work and how whichever market you're testing on reacts to these indicators. And the last point about the use of indicators, or certainly the effectiveness of indicators, is they can be very market dependent. And the example that I'm going to show you really is a good demonstration of how indicators are market dependent. Now, what do I mean by market dependent? Well, for example, the strategy I'm going to show you uses an RSI, which is an oscillator, and ultimately it gives signals for when the market is oversold market is overbought. Now, on some markets, I'm going to show you a strategy on the S&P 500 or the E-mini. Then, when the particular indicator shows that the market is very oversold, and that's a good buy signal on the S&P 500, because the market is typically very mean reverting. I'm talking about on the daily time frame here. However, you go and apply that to any other market and you'll find it's nowhere near as effective. I've done it, I've tested it. So what works really well on one market may not work at all on the next market. So if you find an indicator or a strategy that works really well and then you start testing it on multiple markets, don't be disappointed if it doesn't work as well as the first one. Or on the flip side of that, if you've got an indicator that makes sense and you think it's going to work really well, first market or first couple of markets you test it on, it doesn't work at all, then don't be too disappointed. Carry on trying different markets. Some markets are very trend following and some markets are very mean reverting, like the E-mini or the S&P 500. So this particular strategy or this particular indicator that you can certainly build a strategy around is, I've already mentioned, it's for the S&P 500 or the E-mini future, and it uses a daily time frame. So get yourself a daily chart, and I encourage you actually go and look at this because it's actually quite impressive visually. You can, without doing too much testing, too much noting down the prices, back testing, if some of you are into back testing or not, or even coding, you can visually see this on your chart. Pull up a daily chart of the E-mini or the S&P 500. Then apply an oscillator, RSI. Now, RSI, typically, you'll see it's, typically the default is 14 periods on the RSI. Most charting packages will allow you to change that. Change that to 2 periods. So you're looking for a 2-period RSI. Now you're looking for buy signals. So daily chart, S&P 500. When the closing price, so wait till the market's closed, look at the RSI. If the RSI level is below 10, then we're looking for a buy signal. So you want to be buying the open, or certainly very soon after you want to be buying the S&P 500. And I think you'll be quite impressed with the accuracy. I don't take any credit for this particular strategy. Larry Connors was somebody that I got this strategy from. You can look up some of Larry Connors' work. So you've bought into the market. When you're in the market, obviously you need an exit signal. Where are you going to get out? Well, there is an array of different exits we can use, but something that I've tested lots of different ones, but something very simple. Again, look at the RSI level of the 2-period RSI, and when the closing prices are closed and it's above 70, then you're looking to exit. You can exit at the open of the next day and do some back testing. Have a look at it. Even visually, just look at it on the charts. Every time that RSI, that 2-period RSI drops below 10, you know, or it's very reliable that within the next few days, the S&P 500 is going to bounce back and it's going to rally for a few days until you get your exit signal. So that's a little lesson there on indicators, some of my takes over the years that I've been trading and studying the markets, and I hope that's been of some sort of use. If you've got any comments or questions about different indicators, please comment in the comments or the description down below and I'll get back to you. And if you want a more detailed description of that strategy, where you can either look up Larry Connors' work himself, or I can put together a little video, a little demonstration. I can even show you on my charting package exactly how things work, and you can look at building a trading strategy around that indicator. And if you want any more information on strategies, that sort of thing, go and have a look at my website or my blog. It's thetransparenttrader.com. Okay, for now, thank you and goodbye.